I'm Susan McGinnis with Clean Skies News. A still struggling economy, volatile financial markets, pending legislation on energy, and the direction of stimulus funds all have people wondering if this is the time to take a new look at the energy sector from an investment perspective. Here to help us figure that out are Elliott Gue, editor of the Energy Letter and the Energy Strategist. Also, Nick Hodge is here. He's managing editor for Green Ship Stocks, the newsletter, and co-author of Investing in Renewable Energy, Making Money on Green Ship Stocks. Thank you both for being here.
Thank you.
Elliott, let me get your perspective on oil and gas, because prices have been so volatile on prospects for economic recovery, and when is energy demand going to happen? Now, you have said we have oil around $60 right now. You have called for $80 this year. What is your perspective on a recovery, and is this a good time to be investing in oil and gas?
I do think so. I've been kind of looking for a pullback to come this summer, and we've seen that. The main catalyst for that pullback was some sort of volatility in the economic data. We have some economic indicators pointing towards recovery later this year. Others that are a little bit less strong, and that's caused some people to take some money off the table. But I do think towards the end of this year we're going to get clearer signs of economic growth, and I think you're going to see then oil rally back up over that $80 level. Okay,
and how about natural gas?
Natural gas has been a little bit different story. It's pretty much hung around the lows pretty much all for the last 2 or 3 months. The main problem there is also economic growth prospects, which have cut industrial demand for natural gas a lot.
Right, so no sign of that coming back yet?
Not yet, although as the economy recovers, you would expect that to stabilize and begin to grow. And I think the real thing to watch for natural gas is going to be the supply side of things. We've seen the drilling rig count drop, drilling activity really decline immensely since about a year ago period, in August when it topped out a year ago. And that's going to result in lower production going forward.
Okay. And Nick, where do you think the opportunities are in the renewable sector? Because this has really been getting a lot of attention lately with new funds, new stimulus funds from DOE headed to wind and solar and other renewables areas. And we just got word that electricity production for the renewables area is the only sector you were saying showing a growth in the past year?
That's right. The EIA just came out with numbers 2 days ago that said renewable energy was the only sector to increase electricity production from April 08 to April 09. Coal was down something like 13%, nuclear down in the 12% range, natural gas down 1.5%, but yet wind was up around over 35%. Turning to the stimulus, it was basically a psychological stimulus back in February and has continued to be so until now because the stimulus money hasn't been spent. Now that the rules have come out, last week the DOE has said the grant rules are out there. You can start applying August 1st and you'll get your money 60 days later with no cap. That's $3 billion. So this is really what we've been waiting for. Over the past few months, 3, 4, 5 months, there's been no capital to start new projects. Right. And so we've been turning to less capital intensive industries like the smart grid, which may be software based. But now that this capital is starting to flow again, I think we should be using the dips to get into the major renewable production technologies, especially wind.
So are you seeing a move on Wall Street so far, or is it about to happen?
I'll tell you, the past 2 weeks, as Elliott was saying, have been pretty rough across the board. I'd be using these dips, yes. The banks are willing to lend. I've heard from Deutsche Bank, Citibank, Goldman Sachs. They want to fund these projects, but they've been waiting for the rules from the DOE because they weren't going to give money before they knew what the lending rules were going to be. Now that that's happened, it's a huge catalyst for renewables.
So where are the opportunities then?
Wind in the U.S. is expected to double in the next 3 years, double in China in the next 1. I'd be holding a broad-based wind ETF like FAN that holds major European producers who are cranking out these turbines and have exposure to the Chinese and US
market. That's where the major manufacturing of turbines here is going to come from for now?
GE is a small percentage of the mix, but you can't get that as a pure play renewable. So I'd have to hold an ETF that holds Vestas, Gamesa, Iberdrola, some green utilities from Europe.
Right. Solar is also getting a boost from DOE as well. Where are your picks there?
Again, you have to stay with the stalwarts right now, just because the capital structures aren't in place yet. I'd be buying First Solar on dips, SunPower on dips, who was starting to own their own production facilities. Not relying on utilities to buy these assets. Right. And then some of the Chinese producers who are starting to make inroads into the U.S. market. Suntech is trying to set up facilities in the U.S. Yingli just announced today that they're opening a New York office. So those are some companies I'd be looking at.
Elliott, would you make moves at this point into natural gas companies or funds that hold them, and also oil companies, or are we not yet, or should we wait a bit?
I think we're very close to a bottom for oil prices. I think they could go down to the $55 area as a very, very low. But energy stocks have actually reacted far faster and have been selling off far longer than energy itself. So I think we're closer to a bottom in the stocks than we are in the underlying commodities. And I would look towards the services names being a very good entry point for stocks like Weatherford and Schlumberger. On the natural gas side, natural gas prices remain very depressed. And I'd look at some of the big producers in the shale, companies like XTO Energy, EOG Resources.
Okay. How about from a business investment perspective, Nick? Are you seeing venture capital rush into some different areas?
The funding levels have remained nearly flat from 2008. That we're beginning to see an uptick now. I was just at the Renewable Energy Finance Forum at Wall Street a few weeks ago, and all the VC guys are talking less capital-intensive businesses. So they don't want to pony up the money to build huge production facilities or do tons of research. They want results now and with quick payback time frames. And so they're looking right now. I hear smart grid.
Yeah, where are the opportunities there? Are we talking about Googles and IBMs of the world, or?
Yeah, but that's not a pure play. Google is using their software prowess to. They have a website called Power Meter, which is essentially an interface that consumers can see their power use in real time. Microsoft is now on that wagon. They introduced Home a few weeks ago. GE had a press release yesterday. They're pursuing the net zero energy house. So yeah, the big boys are on this. Yeah.
Elliott, what about nuclear energy? Are there opportunities there right now?
I think so. I think there's a lot of opportunity there. We've seen a lot of the big Chinese utilities come into the market buying up uranium over the last 3 or 4 months. It's brought uranium prices up over $50 a pound again. So I think that's an area where we're going to see a lot of growth in coming years. China, India are building out a lot of nuclear power. We're starting to hear about Italy, a lot of the European countries, Britain, and of course the United States also returning to nuclear as a major source of power. And on that side, I would look at some of the big uranium producers like Cameco in Canada, or some of the big utilities that use a lot of nuclear power. They would also benefit a lot from cap and trade legislation, because obviously nuclear doesn't emit any carbon dioxide whatsoever.
And with funding going into carbon capture and storage technologies and experimental plants, where do you see the opportunities for coal, if any?
Coal is really the world's largest source of electricity. It's half the world's electricity, and it's half in the United States. It's more like 80% in places like China. So I don't think coal is going to go away. And carbon capture and storage is one way that you can make coal more environmentally friendly from a carbon standpoint. The companies I like on the coal side, the place where we're seeing demand come back the fastest for coal is Asia. So I would look at companies that have exposure to China in particular, and India. In terms of selling coal into those markets. Peabody Energy is the one American company that has a large exposure to the Australian market, selling coal into China.
Okay, all right, we will leave it there. Nick Hodge from the Green Ship Review, Elliott Gue from Energy Strategist, thank you so much.
Thank you.
Thanks.
And I'm Susan McGinnis, Clean Skies News.